everyone, John Henry here, slingshotfutures.com, and welcome to the daily futures and crypto market outlook for tomorrow's trading. That's going to be for the 26th of the month. Going on a pretty solid run so far. Big pullback in the index markets, a lot of volatility, finally seeing the markets move a little bit. Finally seeing them move a little bit. Before we jump on in, as always, make sure to swing on down at the website, slingshotfutures.com. Scroll down, click on the Join the Daily Outlook newsletter. You'll be able to sign up for our newsletter, so you'll be notified every time one of these videos comes out. Along with that, in the newsletter itself, we go over different stocks, different cryptos. If it's moving or of interest, it will show up in there at some point, so it's a great newsletter to get your hands on if you haven't already signed up. Along with that, if you haven't done so already, make sure to click on the live trading subscription and trial info so you can sign up for a free 3-day trial in our room, and you can hang out with us in the live trade room. You can see what we're doing all day, see how we analyze the charts, and just generally kind of hang out with us for a couple days. It's a good way to kind of see what is going on and how we manage ourselves in the market, and it's a good way to kind of, get your feel on what we do every day. So a couple things to look at. First of all, the euro catching a nice lift to the upside. Was looking a little bit exhaustive yesterday with that big pop up and immediate failure lower. But like we were saying a couple times, where's the proof, right? The sellers try coming in, but where are they? We have this gigantic bear bar and nobody shows up to the party. Same thing with the buy side. Giant bull bar shows up. Nobody wants to follow through. So we're in a little bit of a chop fest. It does appear as though we are trying to put in another high, and this is getting even more climactic. Much more than just this one giant candle up, because now we're getting even more exhausted. The buyers just seem to be overexerting themselves a little too much, a little too fast. I do like the longer term, more of a range low buy, which we're cycling off of at 17,730 still. But it looks like they're trying to get it done all in one shot, and they might be overdoing it just a little bit. So where we are right now, although I do like the long side, now that we've really proven the buy side, it makes a lot more sense to be a buyer, but I don't want to be a buyer here. We've done, again, too much, too fast. There's just way too much upside for me to want to be buying the highs, hoping that it goes further. I would much rather look for a pullback in this case. A lot of buyers are going to be really geared up wanting to buy any kind of pullback, and if we look back a little bit, we can see a nice level of kind of structured support and resistance coming through the market. Right at around 18,175, and that's really where I would like to see a pullback too. That would give us some balance to the market. That's where we found resistance, we found support and resistance, support, resistance, all in the same area, and that would give a beautiful location for buyers to jump in, not buying too high. Being that conservative may mean that you might miss the opportunity, you might not pull back that far, but that is where I am looking for at the moment, so I'm not buying the highs of this euro rally. Over on gold, we're seeing a little bit of a sign of exhaustion from the sellers. The sellers missed the lows by just a little bit here, not a big deal. They missed them again. They tried coming back down and completing it, but they missed the wedge lows once again, showing that, well, the sellers just are running out of steam. They've had this market pinned to the bottom for, well, since the 16th really, and it just hasn't started lifting. And every time it did lift, sellers just swatted it right back down again, and now they're running out of steam. Now, support coming off at 1273.7 is holding the market up a little bit, but really what this tells us is that we're probably going to see the sellers jump in, but sellers are losing interest in the lows. When the sellers have interest in the lows, you get follow through. It continues down to retest those objectives. We're not seeing that right now. So because of that lack of follow through, that leads me to believe that we need to be looking for better prices. Better prices could be swing high traps. It could be, your favorite Fibonacci level, whatever your variant of not selling the low is, that might just be good enough, because it looks as though a lot of sellers are not very interested in selling right now. They would rather get some better prices. Now, there was a little bit of news today when it came to the gold response and reaction and movement and all of that fun stuff, causing a little bit of this lift here. But really, I'm not going to be interested in selling until around 82.5 up to 85.3 or so. And even then, you might be able to wait all the way until 93. There's plenty of room for the market to rise higher before the sellers really start dominating. And with this lack of conviction on the downside, I think that's the only way right now to approach gold, other than just switching to a buy side. If you're looking to maintain this downward trend, looking to sell as high as possible. On crude oil, inventories hit, they were a little bit mixed. Inventories didn't really prove a whole lot. We had the API yesterday forecasting one thing, and the inventory forecast for today was the complete opposite. It came out as a mess. API, of course, came out more accurate. Surprise, surprise. And well, the market really didn't seem to respond a whole lot. We're falling a little bit off of the highs of the range. We had the range low working really nicely, lots of buying opportunities off the range lows, even that trap at the bottom, selling opportunities off of the highs of the range, and now we have a potential trap top. I'm not as convinced that we're going to cycle all the way down like we had down here. We broke down and rallied all the way back up. I'm not as convinced that we're going to get that kind of movement in this situation, mainly just due to the fact that the bull side, although it doesn't look very strong right now, is going along with the larger trend for September. September going into October has been bullish, other than that little pullback that we had here to kind of kick off October. We're right back up towards those highs, and the buyers are going to be looking to complete those objectives to the upside. I think this is nothing more than a pullback to buy in at slightly cheaper prices once again. Major support and resistance cutting through at around 51.70s or so, 75. If they can get a decent pullback down to there, that's the last time we saw that major support. Wouldn't be that bad of an option for looking for some buy-side opportunity. Now, depending on how long this takes, one thing to also consider is that this may grind all the way down to the channel lows. And, well, the channel lows would be the next area of opportunity, but noting that we are falling very short of the highs of the channel, this may be dealing with more of a wedge now. So a wedge coming across the highs, it could potentially cut short some of the profit of the upside buyers, but overall, I think buying a dip makes a lot more sense right now on crude oil, and that looks to be about what the market is planning on doing at this point in time. And then we've got the S&P and all of the index markets really getting a slap on the hand and then a slap in the face and then a good old kick in the butt. We have a big old dive lower on the index markets. And this was that second leg that we've been talking about for the last couple days, and how it was so surprising that it really didn't show up. It took a long time for that secondary leg to break down, but man alive, when that thing showed up, it showed up. It came with some strength to the party. Big old bear side movement all the way down to that earlier major support at 25.42.5. We've torched the support at 49.75. That is pretty much gone. And we've also come down to retest the bottom of that megaphone. So we have a lot of levels that are coming into play here that are definitely of interest. We have the blow off on the highs, which was unsustainable. We finally had that second leg down, broke down very aggressively into major support at 25.42.5, along with the bottom of the wedge at around 43.75, and a lot of buying pressure is coming off of that. So with that said, I don't necessarily believe the downside is done. I think a lot of buyers are going to be buying into this, mainly because it's going to be seen as cheap. This is the biggest pullback, in terms of movement size, that we've had since that quick little pullback on the 19th, and that was nowhere near as big as this. It's the first pullback that we've had of decent size, especially if you look at the Dow, in quite a while, and the Dow back on the 19th there as well. So with that, I think buyers are going to be buying into this dip, but they may have to buy more if it falls lower. I would rather look to see one more attempt at the bottom. We have a trap, and we have a lot of reasons for the buyers to believe this. I wouldn't mind pre-positioning a little bit, but I also wouldn't mind seeing one more trap on the lows to around 39.5 to finish off that move and finally get that rally back to the upside. I by no means think the rally to the upside is done. I consider this a healthy pullback, a necessary pullback, if you will, on the index markets. They need it. We've been pinned to the highs, and, well, in order for a market to keep going, you got to get those waves in there. Otherwise, it gets a little too much, and then it crumbles under itself. So this is a good thing. It may not feel like it today if you're a long-term holder of stocks, but, well, this is definitely a good thing for longer-term growth and expansion. Now, it might not be done, so keep that in mind, but I am looking for longer term for this to return to the highs. So that's going to do it for the outlook for today. Now, looking at the news for tomorrow, we do have a big news announcement for the U.S., but that doesn't happen until 10 o'clock. Tomorrow morning, out of the Eurozone, we have the deposit facility rate forecasted at 0.4%. At 7:45 as well, we have ECB interest rate decisions for October forecasted flat at 0. And then we have at 8:30 the ECB press conference, and that's going to be the big one. So with the press conference happening at 8:30, a bunch of news happening at 7:45, even though it's more for the Eurozone, it could definitely cause a little bit of a problem for U.S. markets, with them kind of holding off a little bit in the morning and waiting to see what the response is to those press conferences and interest rate decisions. Later in the morning session tomorrow, we have at 10 o'clock news for the pending home sales month-over-month for September, forecasted at 0.2%, and that is all we have for the news calendar going into the 26th. Now, taking a look at the crypto side of things, we have Bitcoin still pulling back. We are holding this area. We have that 3-push wedge bottom. That is the trap retest zone. We have buying pressure abound like crazy down here with heavy buying pressure. As long as this low is not broken, or if it's barely broken and fails and pops back up, that's fine as well. But 53.7665 is that major level of support, and as long as that stays put and we don't start breaking through that, we have a very good shot of this cycling all the way back up. This might be the start of the correction back into 6,000, and like we saw with 5,000, we broke through 5, ran straight to 6 pretty much. We might see the same thing, break through 6, run straight to 7. Of course, you know, for long-term Bitcoin holders, I'm sure they would love that. But the overall movement right now is exhaustive for the sellers. The sellers have, once again, like we've been talking about a lot today, they've done too much too fast. We have the wedge, we've broken through the wedge. We're retesting the wedge as support. Lots of things showing that as long as this low stays intact and it stays the low, we should have a good rally on our hands in the coming days to potentially weeks. Over on Ethereum, catching a nice little wedge bottom bounce. We are bouncing off of not only the wedge bottom coming through here, but this is also that longer term bounce off of major support and a retest of that falling resistance. We're getting stuck here a little bit. I would really like to see them break above this and then use those two as support instead of kind of hovering on top of them. But all things aside, we are seeing buyers attempting to step up. Small little kind of wedge flag-ish inside here, and it looks like a twin reversal with a 1 candle distance gap as well. Good signs for the buyers, but they haven't really shown up to the party yet, and that may mean that we need a trap on the lows before we start kicking that move to the upside. I still think Ethereum has a good shot at the highs, especially with that monster rally to the upside, and as long as we can stay above stay above the high of these lows, is that the way to put it? Stay above the high of these lows, we should be okay for continuation to the upside, but we are looking a little bit weak. We're not getting very good candle formation, and that might mean that we have to wait for a trap first. Either way, though, Ethereum is looking fairly good. Maybe a little bit of a deeper price might be necessary before you go jumping on in. And then, of course, Litecoin doing very similar things, pulling back to the major bottom, and they're holding their area of support as well. Again, that line in the sand is a big deal that Litecoin is going to have to deal with at some point or another. Could be widening out the wedge top just a little bit, and we could also be shallowing out the wedge bottom. So we are seeing the sellers run out of steam down here, not a big surprise, but with all things said, we're holding an area of support, we're holding the 786 on the longer, bigger term picture. The only thing that really stands in the way here is the overall prevailing wedge in that major line in the sand, and we're not even close to that. So I do think that we have a short-term capability of lifting back up into that area, and that gives us a good, $6 range or so that we can look for continuation to the upside before we start really running into trouble. Of course, the falling resistance now that we have isn't too far ahead, but we still have a little bit of room for that as well. So looking for bulls, but I wouldn't mind buying a new low either. I would be pretty pumped about buying a new low. I'd be very happy with the cheaper prices. Litecoin is still trying to hold those lows. We'll have to wait and see what they want to do here, but as long as we hold this major support, we should be good to go all the way up to that line in the sand to retest that as well. Now, on some of the side currencies here, looking at NEO, we're still just kind of rattling around the range. We're halfway back. We're not really doing a whole lot here. So NEO is pretty much the hodl of the day. We're just kind of hanging on and waiting to see what they want to do. We have a lot of things coming on with some Saudi events going with NEO and ETP and some of the other big names. We just have to wait to see what their response to it is. So far, ADA has pounced in that, and they've had a pretty good response. So it's looking good, right? It's definitely looking good. We just need to see a little bit more follow through from these buyers if they want to keep this going to the upside. So ADA, long-term hold, ETP, long-term hold, NEO, long-term hold, and it might be a shorter-term hold depending on how that event goes. It might end up seeing that go all the way back up and doubling itself again like it did the last time around, which I would be a pretty big fan of. So that's going to do it overall. Not a whole lot going on in the crypto sphere. We're still just kind of pausing. I think a lot of people are kind of holding on a little bit and saying, oh, wait a minute, right? We've had a lot of movement. We've gone up, we've gone down. Let's find our bearings and then approach the market again. And that would explain a little bit of this lull that we're seeing in price action. So that's going to do it for this one. Like we always say, it doesn't matter what market you're trading, whether it's cockroach futures or if you're trading corn or crude oil or you name it. If it's moving and you're trading it, you got to make a plan. Trade that plan, follow those rules, and you'll be A-okay. Until next time, we'll see y'all then.